Hi there, I'm Jeff Jr. with Trajan Wealth, and regardless of what's going on in the world, we often get asked a simple question. What is the difference between a traditional IRA and a Roth IRA? And if it's a good idea to convert your traditional IRA to a Roth? Now, assuming you're a client of ours, you may be an expert in this area. And if so, do me a favor. Simply forward this off to your kids or grandkids and get them started on the right foot with a little education. It literally could mean millions to them. So let's get started. IRA stands for Individual Retirement Account, and these plans offer folks a way to save for a secure retirement. IRAs have tax advantages and unique rules, so it's important to understand your options and make an informed decision so that you take the right steps to make your retirement a reality. The Roth IRA was established by the Taxpayer Relief Act of 1997 and was named for Senator William Roth, its chief legislative sponsor. The biggest difference between a Roth and the traditional IRA is how and when you get a tax break. Tax advantage of a traditional IRA is that your contributions are deductible in the year that they're made. So a contribution can help lower your adjusted gross income at tax time. You generally can deduct the amount of your contribution when you file your tax return. The tax advantage of a Roth IRA is that all of your withdrawals in retirement are not taxed. With a Roth IRA, you contribute after-tax dollars though, and your money grows tax-deferred and tax-free. You can generally make tax and penalty-free withdrawals after the age of 59 and a half if you have held that account for at least 5 years. Now with your traditional IRA, your money grows tax-deferred only, and withdrawals are taxed at current income rates after age 59 and a half when you take that withdrawal. Now, while the Roth IRA has some limitations, which I'll address here in a minute, it has a sizable edge over the traditional IRA, and that is because there is no established age where you must begin to take those withdrawals. This allows your money to continue to grow in retirement. This compounding effect can be a very substantial advantage over time. Contrast that to a traditional IRA that forces withdrawals at age 72, whether you need the funds or not. Now, withdrawals must be taken by the required age or the investor could incur a 50% penalty. Again, that's on a traditional IRA. So, by not having to take a required distribution or withdrawal at a certain age, it can lead to a pretty nice advantage to grow your retirement assets, and best of all, tax-free. Now, about the limitation I mentioned earlier. To be eligible to invest in a Roth IRA, individuals must have earned income. Now, what this means is that you must have taxable compensation. It can't just be income such as income from an investment. For tax year 2020, singles who earn $122,000 or less and married couples who together earn less than $189,000 are eligible to invest in a Roth IRA. Congratulations. For folks with incomes above these limits, there is a way to convert assets from a traditional IRA to a Roth IRA. Now, this can be a complex transaction that warrants professional advice. It may be determined that converting a portion of your traditional IRA is a smart tax strategy. Assets converted from a traditional IRA to a Roth IRA will be taxed at current income rates, and it is generally recommended that the tax payment be made from non-IRA funds so that you're not depleting important future resources from your retirement dollars. If you're interested in finding out if the option is suitable for your retirement planning needs, call Trajan Wealth and we'll complete an analysis that will help you make the right decision. Now, I do want you to know another thing. It is possible to own both a traditional and a Roth IRA, and there are more investment options than ever to fund that IRA. Options may include individual stocks or bonds, mutual funds, and exchange-traded funds or ETFs. So, in addition to selecting the right tax-advantaged IRA for a secure retirement future, making sure you own a broadly diversified IRA portfolio is as important as the tax advantages that those plans offer. Meeting with a trusted fiduciary advisor, such as those we have here at Trajan Wealth, provides individuals with professional help to successfully navigate which type of IRA and what types of investments will help meet your specific retirement goals. So with that in mind, I'll see you next week with another video update. Take care until then.